The S&P 500 was up for a sixth straight day yesterday, despite Moody's downgrading the U.S.'s credit rating. Why is that? Well, the bond markets were kind of pricing in, I think, the policies that were leading up to the downgrade ahead of time. We had two prior downgrades. We had S&P downgrade the U.S.'s debt back in 2011 and then Fitch in 2023. This is the last major credit rating agency to do that. This combined with, people knowing that the Doge spending cuts aren't as much as initially projected, combined with the all the tariff policies and uncertainty, and then obviously with the tax cuts, that will raise the debt and deficits. So we're not necessarily getting our fiscal house in order as fast as we initially anticipated. But the bond market, the reason that the markets didn't really sell off is that the bond market, we didn't have a poor bond auction, and that would be the big indicator. Japan had a really bad bond auction yesterday with 20, 30, 40-year yields surging to record highs. And this is something that Japan, we really have to watch. Look, they're saying right now they're not going to stimulate, they're not going to money print. But if their economy deteriorates fast, and if their bond yields rise, we might have, Japan might have to do that. And then that will have ripple effects throughout the economy, and that'll ultimately be good for risk on assets like tech stocks, gold, and Bitcoin, in my opinion, if there's more money printing and stimulus in the global economy. Right now, yes, U.S. bond yields did surge too a little bit, but not as much as you would have initially anticipated given this event, because in my opinion, it was largely priced in. The retail stock trader, it was a retail biggest day, and buying stocks, $4.1 billion of stocks in the market ever. This was even more than April's previous record after the tariff liberation day dip and retail being a net buyer. Retail was right then. Who knows if retail's right now, but retail won over the institutions yesterday. The dumb money won over the institutions yesterday. That doesn't mean it'll continue. Who knows how the market will trade a few weeks from now if inflation, reaccelerates, especially if we see in next month's inflation reading for May and employment numbers. That could cause another leg down in the market and retest the lows. But right now, it looks like the retail investor and dumb money is right. So let's see if that continues. Additionally, we had a stablecoin bill pass, passing the Senate in terms of a floor vote. That'll be good for the adoption of stablecoins. Honestly, I think it's good for U.S. Treasuries. It'll bring more demand for our bonds. It'll provide clear rules of the road, good regulatory, with a clear regulatory roadmap. It'll lessen costs of payments for cross-border transactions. And I think this is good not only for stablecoins in general, but for the crypto industry. And Bitcoin has also been doing well, as I highlighted in yesterday's video. So let's hope the stablecoin bill fully officially passes. Time will tell. And then NVIDIA had its, and Jensen Huang, Jensanity, had their keynote speech in Taiwan, Computex 2025. This was a huge keynote speech by Jensen Huang. He was pretty much saying that, there's going to be new products that NVIDIA is releasing, new chips, new supercomputers. But the biggest thing of them all is the NVLink Fusion, which is pretty much allowing non-NVIDIA partners, non-NVIDIA chips to fully integrate into NVIDIA's chip stack. And I think that's another leg of growth for NVIDIA. Pretty much you could have, Google TPUs, you could have, other chips from other providers pretty much have access and adaptability into this NVLink Fusion. Custom ASIC chips will be able to have access and do work along with NVIDIA chips in NVLink Fusion. So partnering and opening up their hardware and adaptability to other chip providers and ASICs is huge. And then this combined, obviously, with NVIDIA reinstating that they're going to be AI factories, and the infrastructure layer for AI factories is huge. And then admitting that robotics and using AI for robotics to accelerate robotics robotics will be a multi-trillion-dollar industry in of itself, and this is why NVIDIA is my favorite stock to own. It's the pick and shovels player of AI and the digital gold rush, fourth industrial revolution, and the next NVIDIA is NVIDIA, in my opinion. Don't overcomplicate it. They're doing obviously a mixture of the chips, the hardware, and a little bit of their software with the CUDA platform. And you know, there's a gold rush for NVIDIA's chips. We saw it in the Middle East. We're seeing it with all the hyperscalers. They can't get enough of NVIDIA's chips to run their large language models and their inference computes. So the next leg of growth obviously is inference, you know, pretty much the thought and reasoning. But NVIDIA I still see as the main play and the best stock to buy really right now. You know, it's there's so much demand out there for NVIDIA's chips. But going back to what I said, you know, I think the market could trade higher from here. I think there was a lot of fear into the Moody's credit downgrade, you know, the other day, especially because the bond market has been pricing that in for quite some time. You know, the credit downgrade was a result of yesterday's policies, and the downgrade is a lagging indicator, as I mentioned in yesterday's video.